Hey guys, welcome back to the channel. Matt with Greenbar Trading here. Today was a no trade day for me. Now, you might think to yourself, why would I not take any trades? Well, the market opened up and went straight down. Now, this is a problem for me because I don't usually like to take a trade within the first 15 minutes of the open. I like to let things play out. Now, a lot of times what we have seen is the market may drop a little bit and retest that high and then continue down. That simply did not happen. I set alerts. I had a perfect game plan for trading NVDA today, and it would have been a very nice trade. Now, I've gotten much more selective, especially this year, on trying to trade less, trying to take some really, really good setups. And those setups I have been finding are when a stock or market is at extremes. So extremely overbought, extremely oversold. The market right now is at that overbought territory with certain stocks like NVIDIA that is at extreme overbought levels. All right. So that was my plan, to take puts in NVIDIA, but I needed to see that kind of retest before I got in short. And I'll go over that in just a second. But before we do, what we did see this morning, and this is really what we've been calling out in a lot of our weekly watch list videos, the market is starting to trade differently. It is not reacting the same way. All right. What do I mean by that? So the jolts, the job openings, that was at 10 a.m. today. Normally, if you got such a big miss, right, less job openings than were expected, the market usually would love that and just skyrocket for the day. All right. Because that means that the Fed is doing its job. We're creating less job openings, and the market usually would respond well to that, like we saw in the bond market. Now, when you get a bad economic reading, like less jobs than expected were created or job openings, that's when you get the pullback in the yield. All right. The yields on the bonds will go down. Why will they go down? Because they're anticipating that the Fed will end up cutting rates because the economy is now suffering. All right. So the bond market traded with that economic data. The bond market sold, actually, the bond yields go down when the bonds get bought. All right. So the rally in the bond market, that was perfectly fine, totally made sense given that JOLTS number. But what didn't happen today? The stock market did not trade with the news and the bond market. So we're starting to see a market that is currently overbought or very close to being overbought, especially on the Qs, right? So these are just levels that I post every day in our Discord. And you can just see these key levels here were basically the top and bottom of this day. So every one of these candles is 1 day of trading. But just don't even worry about all these levels at the moment. I'll take that off, and I want to show you guys what I've been looking at a lot is that RSI, all right? This is the relative strength index, and it is just about at that overbought 70, all right? When we get up this high, we have seen in the past pullbacks. Now, looking back at the whole past year, we haven't hit 70 except for this one time here, which was this right here. We hit 70, very overbought, and then we pulled on back, and then we made that next move. So you can see here, pulled on back, and then made the next move. So I'm watching RSI very closely for extremes, right? Extremely oversold. Levels down here. That was a good time to buy, right? And then back down here. So I've been looking at this, and you can just see here the RSI just about 69.40, just about to where we hit a couple of days ago on the RSI. And then we saw this pullback, during the summer months into October. So anyway, what I'm looking at is I want to first get my bias for what the market is doing. Now, we've been making higher highs and higher lows on the Qs. Everybody knows that. The QQQ has gone up. The NASDAQ market has gone up. All right. Very nice bearish to bullish reversal. So while I might, just for the moment, when we get super overbought here, I like to look for pullbacks. See how extended we are off of that 20 EMA. See how extended we're getting off the 200, off the 50. Usually you'll see some kind of pullback, some days here where it's not, where the dips are just not getting bought up. Even though yesterday, that is exactly what happened. But we just had this inside day right here. So you could see this is yesterday's candle inside the previous day. And then we're seeing this type of doji here today. So, it was just, that was my bias going in. And then what did I want to trade? I wanted to trade NVDA. All right. So you can see here, I have an alert set. That alert simply did not get hit. All right. You can see here on the RSI. Just made an arrow here. The RSI, super overbought. All right. Every time it got up here, it's faced a pullback. Okay. The 20 EMA is that spot that I'm thinking that we're going to pull back to, especially if the market itself pulls on back. All right. This level here at 263.50. This was a nice level. But my alert today, I'll show you guys. This is where it gets super frustrating. So, like I said, I am being very specific in what I want to trade, my entries especially. So, in today's trading day, right here, we sold off the open. I got no chance whatsoever, and I'm not going to chase anything. That's not a good way to trade. But then when we saw this bounce back to 278, I wanted it closer to this 279 area. And that's where I wanted to get in. And I was going to risk to this previous high here in the pre-market. That's where I wanted to risk. I can't get in here and set a reasonable stop. All right. So I don't want to chase. I wanted to see this come back up. It came back to 278 a bunch of times and then just could not go up any higher. All right. So the day before, and this is why, I mean, look at this market. So NVIDIA goes up, down, up, all the way down during the day, and then rallies in the afternoon, right back to that exact same spot. Look at this 279, 280 area, rallied right back. So today I was kind of thinking, okay, right here we go. We're going to come back up here. I want to get a good entry. And I just didn't, it just didn't come up to my alert, which is totally fine. So I missed that trade. That's okay. But I just wanted to show you guys, like I said, no trades today. Absolutely zero trades. I'm getting better at not chasing things. I'm only going to trade if it makes sense. And something that I wanted to trade today, if it did get to my level here, was this 2180. So if it got to 4180, that's a level that I was looking at. So in the pre-market, it did pop up to 4172. So off the open, and in our Discord group, I said, if it gets back to this 4180 spot where we've seen previous resistance, a really nice supply zone, that's where I was going to get in. I was being specific. All right. It just didn't get all the way there. Sometimes days go like this, but I'm trying to get really good entries so that I can let my trade play out and I don't get stopped out. All right. We want that risk to reward to be worth it. You don't want to sit in a trade as a big loser and then take profit when it just gets back to green. I mean, that's not a way to trade. So you have to get good entries and then let the trade play out. So it is what it is. Just missed here on this, and on SPY, I was also going to go short SPY if the E-minis got up to here. All right, so those are my two sort of missed opportunities, but not really. But that's just what I was looking at today. The market, to me, seems a little bit, like I said, overbought. So what I'm going to be looking for is not to go long anything, but to go short when it makes sense. And that is my game plan for this coming week and basically for a little while here. I'm not sold that the market is going to go much higher. I just do not see the risk to reward to owning equities any higher than this. So that's just what I'm thinking. That's my opinion. Do your own due diligence, obviously. But I hope you guys enjoyed the video. Hit the thumbs up, and I will see you on the next one. Take care, guys.